everyone, welcome to Vajiram and Ravi's Data Story. My name is Shubhangi Singh and this is your one-stop solution for value addition to your answers in form of data. So when we are talking about today's session, it is going to be the first session for banking related data and we are going to cover this across two sessions. So in today's session, we are starting with looking at what is the gross NPA ratio that has been put up in government records as of now. So we are looking at the latest data, but based on government's word, we are seeing that the gross NPA ratio stands around 2.15%. It is a historic low, lower than 2010-11 level. And the peak that we had seen was during 2018 where it has crossed 11% mark. When we are looking at bank credit growth, unfortunately, there has been a decline. We are at 10.2%. And when we are talking about the capital adequacy, so when we are looking at CRAR or broadly known as CAR, that is capital adequacy ratio, in that context, we are very comfortably placed at 16.8%. It is an all-time high. When we are talking about capital adequacy ratio, you have to remember two terms important here. First is Basel III norms. Basel III norms, based on that, banks need to maintain the limit of 8%, but 2.5% also needs to come from CCB, that is capital conservation buffer, but RBI has stricter norms. So RBI says this doesn't need to be 8, this needs to be 9 plus 2.5%, that makes it 11.5%. Capital adequacy should be more than 11.5% so as to work as a cushion during the financial shocks. Furthermore, when we are looking at PSBs, that is public sector banks, the profit after tax has been on a record high, which has been 1.78 lakh crores. Now let us break this down and understand this a little better temporally as well. So let us start with gross NPA ratio. When we see the journey across the years, we have seen that yes, it is at a historic low point. This is something that you can use in your answers as it is to put down and show that how NPA has come down. Now moving to the next thing that we are going to add in terms of credit to GDP and also the credit growth trajectory, when we see that India has comparatively come down in terms of credit growth, especially when we are talking about non-food bank credit that is being given. In that we have seen a huge fall, and as compared to the global average, when we are looking in especially credit to GDP ratio, we are way behind. Where we look at India, it is around 57%, global average stands at 90%, and when we look at countries such as China, it is 185%. So in this context, two contexts, we are on the decline, and this is where we have a lot of scope. For what? We have a scope to tap credit potential which is clearly present, and second, we might see a credit boom but which comes with the risks as well. So we have positives and negatives both present here. Now another dimension that we would like to see, which we started with, was bank type NPA comparison. So when we are looking at NPAs, again the highest, even though NPAs have reduced, are concentrated in PSBs. Please remember, when we are talking about NPAs being at a low point, we also have to consider that how much of it has been written off every year and how much government has helped in this situation. Apart from that, when we were talking about CAR, we said that we are Basel III compliant and we are very well placed at the 15.9%. For the PSBs, if we look at scheduled commercial banks, it is more than 16%, where the RBI minimum stands at 11.4. It stands at 11.5% itself, showing us that banking overall is giving us positives and there are certain concerns that need to be addressed. This was all for the first session. I'll be bringing in more data for the second one. Thank you so much.